Do you need to put money down on your house, or should you do 100% financing? Now, everyone is in a different situation, so whether it's right for you will purely depend on your situation and how long you plan to live in the house and how long you plan on financing the property. So I personally like 100% financing programs. There's several different versions of what a 100% financing loan looks like, but there is one I want you to be aware of. And what that is a 100% loan program with no mortgage insurance. Guys, if it sounds too good to be true, there might be a catch. As a buyer, one of the things that you want to take a look at is the interest rate and compare it back against the rate of other loan programs that aren't 100%. Now, 100% loans often come at a much higher rate compared to traditional mortgage programs that are out there. So what happens is many buyers don't always compare a 100% loan with other 100% loans, or 100% loans with 100% no MI loans, and or other loan programs that are out there. So you've got to compare all the different programs that you might qualify for to make an informed decision. And sometimes when you compare a 100% loan program against a loan program that has mortgage insurance, often you'll find that the lower payment is with a loan paying mortgage insurance. So for example, as a buyer, and when you have less than 20% to put down, your lender is going to require you pay PMI, which is also known as private mortgage insurance. This is an additional charge to insure the loan in case of any defaults. So there is a stigma about primary mortgage insurance, right? And that it's an add-on cost. And in a 100% loan program with no PMI, I know it sounds great, but many times it's actually more expensive with a higher payment. This is exactly why you want to compare your interest rate, your loan programs, the different 100% options with other loan programs out there, so that you can review the options and make a qualified and educated decision when buying a home. And what you're going to find out is many times the 100% financing option is more expensive to the borrower, which ends up costing thousands of dollars in the long run. So the most important number that you want to be comfortable with as a buyer is your total monthly payment and the projections over time. Ideally, you want to pay as least amount of money as interest over time, pay more towards principal. And because of this, many borrowers just don't think of the long-term payments in comparison with other loan programs. So as a buyer, the next thing you want to do is you want to figure out how long am I going to hold on or this loan. What you're trying to do is you want to measure the long-term costs of a 100% loan program and compare it to other programs that are out there. So what you want to look at is how long are you going to hold on to this loan and how much is it going to cost you. Your interest rate is not as big a deal short-term as it is long-term. And let me tell you, in today's world of real estate, you want your primary residence to typically have a good long-term rate if you plan on staying in the house for a long period of time. For example, the rate on a 100% loan program is roughly 5%, which makes a monthly payment of roughly $1,074 on a $200,000 loan amount. Now, the same borrower could have a conventional loan with as little as 3% down. Their interest rate on that would be roughly 3.25%, and the monthly payment would be around $845 per month. Now, over a period of 5 years, you would pay roughly $13,740 more in interest with a 100% no PMI loan than you would with a conventional loan with PMI. So here's my advice. Be smart, shop around, ask questions, and make the best decision for your circumstances at the most competitive price. If you have any additional questions or information specific to your situation, please feel free to message me. You can even call me at 903-918-9959 or check us out online at www.kennethtravis.com, and thanks for watching.